And then Ben, can you keep admitting people out of the waiting room while I start talking?
Sure.
Thank you very much. So thanks everybody for joining us this morning. If you're just coming in out of the waiting room, if you're not muted, please go ahead and mute yourself. It should be muted, but just in case, I appreciate that. We have a few people coming in out of the waiting room still, and as people come in, they will be admitted. But again, thank you for joining us this morning for the Pan-Asia Business Forum brought to us by the City of Dublin. So thank you very much to them for their sponsorship. This is a great event because it brings together 3 different organizations in the community with 4 speakers with different expertise, and I think this is a good example of how we can all work together in these times of so much division. I think it shows that even though we have different perspectives, we all work together just fine here in Columbus, Ohio. So maybe we can share some of this love with the rest of the country. So the Pan-Asia Business Forum, we got together to make sure that we can share ideas and opportunities going on in Asia with folks here in Central Ohio, and we have some great speakers with us this morning. First of all, I'd like to ask Rachel Ray from City of Dublin to speak for a second, because it is through their generous support that this event can happen this morning. Rachel?
Well, good morning. Thank you, Pat, and thank you to our panelists and for those who are attending today's session. As many of you know, Dublin is actually a global city. Census estimates estimate that about 1 in 6 Dublin residents are of Asian descent, which is the highest concentration of any Ohio city. And so with support of Dublin City Councils, past and present, Dublin's investment in economic development and dedication to its residents have really made Dublin a community that's welcoming to all. And so in recognition of these strengths, the City of Dublin has an economic development strategy that focuses on international business. Dublin has a well-known history of attracting foreign direct investment because of our community amenities, high quality of life, thriving regional business ecosystem. We also know that companies that export not only grow faster, but are less vulnerable to domestic economic downturns. So our team at the city's Economic Development Division works to connect companies with cost-effective resources that will enable them to reach those global markets. So this is one great example, and we are very proud of our partnership with the Chinese Chamber, as well as JASCO and the AIABG, and we're very excited to sponsor today's very special program that brings all of these organizations together along with other experts. So thank you again, Pat, and to our panelists, and we hope you all enjoy today's session.
Great, thanks, Rachel. Next, I'd like to invite Ben Pachter, Executive Director of the Japan America Society of Central Ohio, a valued partner of the Chinese Chamber.
Thanks, Pat. Good morning, everybody. Like Pat said, my name is Ben Pachter. I'm Executive Director of JASCO, Japan America Society Central Ohio. We are a nonprofit dedicated to help support Japan-America relations in the area, and that includes supporting Japanese businesses. As many of you may be aware, Japan, and I'm sure you're going to hear about it later, Japan is Ohio's #1 foreign investor. But this event today is very exciting for us because whenever we look at Japanese businesses in the area, it is the connections between Japan, the United States, China, and India that are so essential to Japanese business going on right now. You think about the supply chains that are occurring throughout all these countries, but also particularly maybe of note is the research and development chains that we are seeing throughout all of these countries. So it's very exciting to be able to place a little bit of a spotlight on connections that maybe are not discussed as much because, you know, like Pat said, despite maybe some of the political tensions that there may be out there, if we're looking at the economic realities and the business realities, especially as they are present in Ohio today, the connections between Japan, China, India, and the United States are as strong as they've ever been. So on behalf of the Board of Directors of JASCO, thank you for joining us, and we're looking forward to all the conversation today.
Great, thanks, Ben. Next, I'd like to invite Vivek Arunachalam to speak for AIABG, another valued partner of the Chinese Chamber.
Hey, good morning, Pat. Good morning, everyone. You go to the next slide, I think. So I just wanted to have a quick introduction about the AIBG. We have the Asian Indian Business Group. I'm sorry. It's a Asian Indian American business group, the largest business group in Central Ohio, predominantly entrepreneurs of Indian descent. Some of our contribution can be found in economic development, particularly high-tech and healthcare, hospitality, and engineering fields. And we are not only just limited to those things, we have a more professional joining in our group and doing so. And it's established in 1988. AIABG represents hundreds of voices in the city, and we are very active community seek members partly alike and help us to reach our community, make positive impact on those individuals who are in needs. And AIBG provides a platform for our members, share ideas, concerns, and work together with our community at large. AIBG, through its membership, awareness of Indian community and obligations, responsibility through Central Ohio as well as United States of America. The next slide, please. Thank you. So we have supported by the city and state National Trade Division, encouraging Indian government to do business with Ohio, and as well as, and we are a really active role in Governor's Trades Commission. And we're really thankful for, City of Dublin, because, we're really close partnership with the Economic Development Division, and we continually provide support to them, and actually they support us too. And it's really nice to work with JASCO as well as Chinese Chamber of Commerce. And it's going to be a great event. So back to you, Pat. Thank you.
Thanks, Vivek. And just a little plug for our Chinese Chamber as well. So thank you for our members for making this program and other programs we do possible, including our speakers here today. So before we get started, I just want to let everybody know that as you have questions that you would like to ask our speakers, please send them to me in one-to-one message through Zoom messaging, and I will collect them. And at the end, after everyone has spoken, then I will start going through the questions and asking them of our speakers. So I will introduce each speaker before they begin. And our first speaker today is Vanita Mehra of Kegler Brown. Vanita serves as leader of Kegler Brown's global business practice and is qualified and licensed to practice law in both Ohio and India. She counsels corporate clients regarding a broad range of complex national and international corporate transactions and intellectual property issues. So thank you again, Vanita, for your time this morning, and the floor is yours.
Thank you, Patrick. Appreciate the introduction. And as everybody can see, India is the first country we are talking about, so you can imagine how important that country is, maybe perhaps more important than the others. I'm just kidding. But what I'm going to try to do in the limited time I have is give you an overview of what are the current opportunities that are available in India. Despite the pandemic, despite the slowdown, it's still a very attractive market for investments. And then along with investments, there are certain issues that come along too, which I would like to share with you all. Like I mentioned, that India has still continued to show a strong economic track record despite the pandemic blip. And a lot of the reasons for the growth has been the key reforms the government has undertaken to liberalize the market, and also the ease of doing business in India. But if you look at a high level as to why India, India is the, next slide, Patrick. India is the sixth largest economy in terms of GDP, and people don't realize that it's actually 2 years ago it was the fifth largest economy. It took over Japan, and now because of the pandemic it's gone down to the sixth, but that's still not bad in the big scheme of things. It has the third largest purchasing power parity. It's the second most populated country with about 138 billion people, which are actually registered, accountable people. There's another population of India which is unaccounted for and not registered. And so it's definitely way more than 1.38 billion. And is actually one of the largest democracy in India. And because it is such a vast populated country, a lot of the growth is driven by the growing middle class market, which present new customers for US businesses, in area from consumer durable goods to automobiles to healthcare to electronics. There's a wide variety of demand in India because of the large populated country that it is. It also boasts, a range of industries, and because the market consumption is so high, it also leads to a diversified labor market supply. So it definitely becomes a win-win from all angles in terms of people looking at India for a market to sell their products or services. And the most important thing is just recently, India improved its rank of ease of doing business. The World Bank report comes up with a ranking system every year. India used to be at about 95 to 98 out of 140 countries in terms of ease of doing business. When the new government came in, not the new, the previous government which won the election and came back in 2019, one of the main objective was to streamline the process for investing in India and also streamlining the process of doing business in India, and they were able to do that. And now India is ranked about 63 out of 140 countries in the World Bank report. Looking at some sectors as to what sectors should be looked at for investment in India. Next slide. The number one sector, which is, we can actually skip this slide, Patrick. The number one sector that we look at is the digital economy sector. It offers prospects because, as I mentioned, India is a populated country. It has a huge population, and most of that population is in the young age group of 35 and less. And that brings about a prospect of 300 million internet subscribers. And that economy is worth about $1 trillion, will be about $1 trillion by 2025. And that is comprising of everything from e-commerce, Internet of Things, artificial intelligence, online payment service providers, and definitely that is a growing sector for companies to look at. That's why the Amazons of the world and IBM on AI, a lot of the online payment providers like Verifone and PayPal, they all have presence in India. The next is the electronic system design and manufacturing, ESDM. Next slide. What has happened in that sector is that due to the low cost manufacturing base, we are still not as low cost as China is, but we're soon becoming a competitor to China in terms of the low cost manufacturing base. And mostly the growth is focused not so much about the export of those products after manufacturing. The growth is focused on the huge local demand. India by itself has such a local demand that it can funnel the growth in manufacturing of ESDM units. So therefore, there's a rapidly developing electronics ecosystem because of a huge local demand. Again, the market is valued at about 120 billion, and it comprises of mobile phones, consumer electronics, LEDs manufacturing is huge in India. It's, I think, number 2 after China, and then obviously computer hardware. I'm sure you must have heard in the last year or so, Apple moved some of their computer hardware manufacturing to India from China. So that is another growing sector in terms of investment, and the big US players are already in India, dabbling in that sector. The next sector for growth is pharmaceuticals. And I don't know if all of you all know, but India is the largest provider of generic medicines. If you buy your medicines from Kroger or CVS or Walgreens or anywhere, and if there's generic, it is a big chance that at least those medicines, 8 out of 10 times, have been manufactured in India and they have been exported to the US. You talk from vitamin Ds to your ibuprofens to everything, is kind of the India pharmaceutical companies are the leaders in generic medicine. 20% of the share in the global supply by volume is actually covered by India. To the extent that there's so much generic manufacturing and export-import happening, key companies out of the US, pharmaceutical companies, have set up R&D centers in India. And that has also led to the FDA leading to setting up FDA offices in India. There are around 30 FDA offices in India now for checking on these generic medicines. The next sector is the medical device manufacturing sector. Historically, the reliance was on imports for medical devices, but now India is trying to focus to make itself a global manufacturing hub for medical devices. And that ranges anyways from equipment, instruments, consumable, implants, all of that have attractive, most of it, the FDI. The next industry, which has also taken a lot of investments in terms of growth, is the food processing industry. It's the 6th largest food and grocery market in the world, and 65%, it accounts for about 65% of India's total retail market. India is also the world's largest processor and producer of nuts, spices, food grade fruits and vegetables. But where the opportunity for investment in this market is the supply chain. India lacks in the sophisticated supply chain that is needed for the food processing industry. And that's where we are seeing most of the investments going in to build an infrastructure for the food supply chain to be put into place. And last but not the least, the sector which has been thriving in India and was actually the #1 sector for investments until everybody else took over was the information technology and the business process management services. US investors in this sector, the big names out of the US are already in India. And there was a survey actually done by McKinsey, which said that India's cost competitiveness in providing IT services is approximately 3 to 4 times more cost effective than the US. And this continues to be a selling proposition in the global sourcing market. I know there has been a lot of pull down on outsourcing, but because of the competitiveness that India offers, that market still seems to be growing. But if we look at, there are these sectors which are there for investment, but what the government has done in recent time for growth is they, like I mentioned, took a couple of measures. Next slide. The most important measure a couple of most important measures have been this implementation of the goods and service tax. I'm sure Michael will talk a little bit about taxes, but India before the GST integration had a system where service tax on goods and services or tax on goods and services were a state mandate, and it was various across different states. And that created a lot of bottleneck in terms of growth and investment. And the government came up with the GST 2 years ago. They're still integrating it, but it has been a great growth impetus for the industries there. Like I said, Prime Minister Modi's focus has been that there has to be an ease of doing business. So there are now single window portals that function as a single point of contact for starting a business, to secure permits and approvals from relevant government departments. And this has also helped in mitigating a lot of issues pertaining to corruption. For those who already know that India already was in the top hundreds of out of 140 countries in corruption, but putting in together these measures has actually helped India to mitigate a lot of the corruption issues that it used to face. Next slide. It also broke down its corporate tax breaks from 32% to 22%. And like I said, there has been expedited regulatory reforms such as the data protection bill. India has tried to amalgamate its multiple labor laws into 4 major codes. So all good stuff on the measures for growth. I have exactly 2 minutes. So I'm going to rush through my other 3 slides. Again, since I'm a lawyer, so I have to leave you all with top legal issues. It can't be all about the business, but we are not going to go through all these issues. But for your perspective, I have listed down that any time you're looking at doing business in India, or you're looking at making investment in India, you must have a good understanding of the foreign direct investment regime there has, what is permitted, what sectors are permitted for investments, and what sectors are not. You want to take a look at your contracts in terms of enforcement. You also want to look at the covenants that you include in those agreements. Would that be enforceable in that country? The third piece is you want to make sure you understand the tax implications in India, because India has a very complicated tax system. It has the income tax, it has the GST, and it also just came out with an equalization levy tax, which is like the e-commerce tax. So you want to make sure you understand that. And then also if you're going to have employees in that country, India has pretty extensive employee-friendly labor laws. So you want to consider that. Next slide. And then intellectual property should be protected. Again, I'm not going to badmouth any other country comparably, but India's intellectual property protection system works pretty efficiently. There are enough Supreme Court and High Court judgments and enough frequent injunctions given. But you still would need to have a plan to protect your IP in that country. And you would also want to consider as to what should be your governing law and dispute resolution with respect to your contracts with your partners in India. Next slide. Some of the takes away, it's really important that since India is one country, but it has numerous states. So when you're looking at doing business in India, you have to look at your entry strategy and related tax structuring, from a state to state perspective and the location that you're going to be investing in. It's very similar to what you would do in the US. Next slide. It's also very important that you do business in India the Indian way, like think global, act local. And the example I give to all my clients is, and the best example is McDonald's. McDonald's was the first fast food chain that went to India, and they are doing splendidly there. I mean, McDonald's does well everywhere in every part of the world. And the reason why they did so well, or they continue to do so well, they took their key products and they Indianized that. So for example, they have a Mac veggie burger, a vegetarian burger, a Mac aloo tikki burger, which is a potato burger in India. My favorite is for their substitute for the Big Mac, which is beefier. In India, we don't serve beef because cow is considered sacred. We have the Maharaja Mac, which is a spicy chicken burger. So every time I go to India, I love eating my Maharaja Mac. My family thinks I'm crazy that I've come from the US and I want to go to a McDonald's. But I'm like, hey, this is the only place I'm going to get my spicy chicken Indian burger. So the whole thing is that each of these players, be it Domino's, be it KFC, be it Kellogg's, went to India and realized that you have to tweak your products, you have to tweak your services to localize it to be successful. And that's the key. If you have your products and services, you do need to look at India as a global platform, but you do have to localize your products and services. And my final takeaway is believe in the 2 R's, which is respect and relationship. The analogy I give is that in the US, we like to do the deal first and then the handshake. In India, we like to do the handshake first and then the deal, because there's so much focus on relationships and respect. If you build that relationship and respect, the deal follows, but it's not the other way around. So sometimes you have to change your mindset and say, hey, I'm going to go build my relationships there, build my, earn the respect of my partners, and trust me, then the deal follows rather than the reverse. But anyways, thank you for your time, and would be happy to take questions later.
Thank you very much, Vanita. And just a reminder to everybody to please send questions to me through the Zoom chat. This is a great moment while you write down Vanita's contact information or take a screenshot to start thinking about questions you want to ask her when we get to the Q&A session. I see good. Some questions are already starting to come in, so we will ask those when we get to Q&A. Thank you very much. Next, I'd like to introduce our next speaker. Dave Cook is a partner in the Voorhees Columbus office and a member of the Labor and Employment Group. His practice focuses on the representation of businesses and individuals in all areas of immigration and naturalization law. Dave speaks Japanese. Dave serves as Honorary Consul of Japan in Columbus. So, Dave?
Great, thanks, Pat, and thank you for the Chinese Chamber and their sponsorship, as well as Rachel and the city of Dublin. Last time I saw Rachel in person, I think, was in Japan. So thank you for your support, and Ben for JASCO and Vivek for AIABG. So well done, Vanita. I'll try and keep up with you, but does a great job. I know that in looking at the registrants, we have some friends from other time zones, and so I appreciate you joining us, especially some of you. I know this is very early for you, so thanks for being on here. I know many of us on this webinar spend a significant amount of time and effort on attracting investment to the US, and specifically to Ohio. But with the few minutes that I have here today, I want to talk about why you should consider investing and doing business in Japan. 39 years ago, I went for the first time, and you can go to the next slide, Patrick. 39 years ago, I went to Japan for the first time, and I've been back nearly 20 times since then. And I've developed a personal affection for Japan and for the Japanese, but I'll try and be a little more objective in my comments today and focus on the business environment, the culture, and the resiliency that you see within the Japanese economy. You know, we saw the early 90s and the difficult economic situation there, and the Japanese economy came out of that. We had the Great Recession in the late 2000s. They've come out of that, and I'm sure as we come out of the pandemic, Japan will be, again, very resilient, and there will be tremendous opportunities to seek investment in doing business in Japan. All right, Patrick, we'll go on to the next. So Japan is a democracy where the rule of law is paramount. The law applies equally to both Japanese businesses and foreign investors, so you can take comfort in that. Accounting rules for businesses are aligned with Western accounting practices, especially the US principles of accounting. So that's, again, an ease of entry into the Japanese market and doing business there. Intellectual property is valued and respected. Companies do not find difficulties in protecting and maintaining their intellectual property rights. In an uncertain Asian political environment currently, when you look at North Korea, South Korea to an extent, China, of course, we can find some stability in Japan that we don't see throughout the rest of Asia. And so establishing a business operation in Japan can help mitigate some of that investment risk. All right, Patrick, on we go. A couple of strategic considerations to think about is that Japan is a member of the Comprehensive and Progressive Trans-Pacific Partnership that was signed back in December of 2018, and of course, which the Trump administration pulled out of in January of 2017. And the recently signed Regional Comprehensive Economic Partnership, which is the first free trade agreement, which includes China, Japan, and South Korea, plus 12 other Asia Pacific economies. So why is that important from a strategic standpoint? It means that an American company in Japan can receive the benefits of lower barriers to trade, such as lower import and export duties, because Japan's a member of these multilateral trade agreements. So strategically, an American company's Japanese operations can then use Japan as an export platform to the rest of Asia, and by leveraging these trade benefits of these agreements. While your US entity cannot take advantage of TPP at this point, or the Regional Comprehensive Economic Partnership. All right, Patrick. Globally, but especially in Japan, the brand of Made in Japan is extremely valuable, more than Made in the US brand, actually. And so the Japanese operations of an American company will achieve this Made in Japan brand recognition for their products and their technologies, and that they produce in Japan to serve both the Japanese market and the markets of Asia Pacific. All right, Patrick. There are many business opportunities in Japan, but your ability to participate in those business opportunities will be enhanced greatly if you have operations in Japan. As we say here, if you're in the neighborhood, if you have an operation or office or a plant in Japan, it's easier for you to have that opportunity to meet with Japanese companies and talk with them with respect to business opportunities. And again, the key there is, as we come out of this pandemic, I think we're going to see many opportunities to work together with Japanese companies and to expand your opportunities to work together with the Japanese companies. All right, next, Patrick. As far as the local business environment, American companies are welcome in Japan by both the central, prefectural, which corresponds to our states, and local governments. American companies are seen in Japan as offering innovative products, technologies, and services. The Japanese government sees American companies as adding a sense of new thinking, new types of business models, and tremendous innovation to the Japan economy. And they feel they need this type of cutting edge American mindset to stimulate their own business thinking. One of the things that has changed in those nearly 40 years that I've been involved with Japan is the fact that in Japan, traditionally, the workforce engaged in lifetime employment, where as soon as someone graduated from university or college, they joined a company and they stayed with that company throughout their career, and it was lockstep. And so it became, because of that system, often for US or other companies seeking to break into the Japanese market, it was harder to find experts, harder to find Japanese workers willing to work for foreign companies because of this lifetime employment model. But as we've seen in the late 2000s, economy and things like that, we've seen a slowdown or a reduction in this lifetime employment. And so that's been to the benefit of US companies or American companies seeking to do business in Japan, because now you have more resources available with respect to the workforce. People are more willing to go to a foreign company and work in that company because that same level of security does not exist in the Japanese companies as may have existed 25 years ago. All right, next slide. So why invest in Japan? I've got a link here for a pamphlet or a presentation that I won't spend a lot of time on, but Patrick, if we're not making the slides available to others, if anyone is interested in this presentation, just drop me an email and I'll be glad to share that with you. So,
and we can put this on online in case any
Perfect.
of the, unless any of the speakers don't want to share, but.
No, that's fine.
Great.
So Japan is an ever-growing economy. It continues to grow. Right now, the government target is 35 trillion yen for foreign direct investment. And they had a record high of 28.6 trillion yen in 2017. Of course, the pandemic has slowed that down a little bit, but they have a very aggressive goal for foreign direct investment and supporting that. It's a sophisticated market. As Vanita mentioned, right now, Japan has the third ranking GDP. India will probably, following the pandemic, overtake it again. But at this point, they are the third ranking GDP in the world. They're an innovative hub. And as Ben mentioned just a little bit in his introduction, R&D and particularly the research happening in high-tech areas is very strong in Japan. It's a business-friendly infrastructure in Japan. When you look at transportation, whether that's railroads, whether that's railways, or whether that's airports, very business-friendly and supportive. And then a comfortable living. I think we've all read stories about how safe cities are in Japan, and education. My alarm is going, so I know my time is up. But just healthcare is good, education's good, all of those things that are important as you have foreign nationals from from the U.S. or other countries moving to Japan. So let me just finish up really quickly with some resources here. JETRO, the Japan External Trade Organization, is the governmental agency of Japan that'll assist with official trade and investment promotion. Great resources available through JETRO. And that includes locally here in Columbus, we have Kiko, who's a grassroots outreach coordinator. And so I've got her contact information on there. Hopefully she's okay with that. She's on the webinar this morning. You can also contact the American Chamber of Commerce in Tokyo. They have 3,000 members representing 600 companies. So again, very strong infrastructure to support foreign investment and foreign companies in Japan. We have JASCO here that does wonderful cultural and business awareness training, and they're helpful. Jobs Ohio and their local partners, whether that's One Columbus or the other local partners. The Ohio Department of Development has resources available. The U.S. Commerce Department also has resources available as you look at investing overseas. So quickly, the conclusion, why Japan? I'd say many of you are very familiar with Japan and have a fondness for the people or culture, but hopefully this information today will serve as a nudge to consider investing in Japan and doing business in Japan. Thanks so much.
Great, thank you very much, Dave. And when we put the PowerPoint online, we'll also include your contact information. Is that okay?
Absolutely.
Fantastic, thank you so much. And I'm reminded of an event I went to last year in Lexington, Kentucky. It was a meeting of US governors and Chinese provincial governors, and all of the governors went on stage to promote their respective state/province. It just reminds me that healthy competition is good. If the national relationships that are currently in more of an adversarial look become more of a competition look, that's a move in the right direction. All right. Thanks again, Dave. Our next speaker is Diana Jia from Porter Wright. Diana practices in both Porter Wright's corporate and litigation departments, where she counsels clients on a wide range of matters, including dispute resolution, mergers and acquisitions, commercial transactions, risk management, and export control. Diana also advises international clients on navigating the U.S. legal system, as well as U.S. companies conducting business overseas. Diana?
Thank you very much, Pat. It is such a pleasure to be with all the panelists. And thank you, City of Dublin. It's a pleasure to be here today to talk about China. Pat, I'm ready for the next slide. Thank you. When my husband and I visited China last year, it didn't take us long to realize how important it is to have a working phone that has mobile payments set up. Almost all the transactions that we made accept mobile payments, some even requires it. When you go to a restaurant, you scan to order, and then you scan to pay. You turn to your phone if you want to catch a ride. On the rare chance that you get a cabbie, chances are that there will be a QR code somewhere for you to scan to pay the fare. It really is a norm, even before the pandemic, to order your groceries and sometimes fruits from other provinces online. It's not just in the first tier cities like Beijing or Shanghai. It is happening in the second tier, third tier, and sometimes in the rural areas as well. Everything is going digital. Pat, I'm ready for the next slide. Okay, so China's GDP ranked second worldwide, and China's digital economy makes up for half of that GDP. That is really what I believe driving China's business. If China is your market, and especially if you're in the retail business, you already know that China is the world's largest e-commerce market, and it makes for 50% of global online transactions. I'm sure that you're familiar with Prime Day and Black Friday. November the 11th, the Singles Day, which is the Chinese equivalent, is considered the single most important shopping day in China. And it is reported this year that the gross merchandise value by Aibg is $74 billion. $74 billion is twice as much as how it did in 2019, and it's 7 times of how Amazon did this year during the Prime Day sale. So what is so great about e-commerce is not just that it connects to small businesses and medium to small businesses to consumers with low entry barriers. It really helps to drive industries as well. With the online transactions, China has really been taking advantages of online transactions, and it's reported that agriculture transactions has grown. Online agriculture transactions for produce has grown more than 20% in the past few years. There is this need for mobile payments, hence the developments of the fintech. And to support the e-commerce, China has really been supporting a solid digital infrastructure, hence the development of telecommunications, 5G network. And it's not just business to consumers. There is a growing need and a lot of attention is being paid towards business to business transactions online. Other than the e-commerce, there has been efforts to digitalize the manufacturing industry. I'm not sure if you guys heard, but earlier this year, Alibaba has revealed a new digital factory called Xunxi. Its vision is to change the made-to-stock manufacturing to made-to-sell, to really utilize the consumer insights, the real-time demands and market tracking to increase productivity and to lower the overheads. The same is true for the investment community. The investment community also recognizes and drives this growth as well. The China-based venture capital companies put 70% of their investment in the digital-related sectors. According to China's National Development and Reform Commission, most of the foreign direct investment in China goes to high-tech and digital sectors as well. The value of the mergers and acquisitions has grown substantially in the information service and e-commerce industries. Pat, I'm ready for the next slide. So on the one hand, this whole digital economy is really data-driven. There is a lot of information flow and data collection, and data is so valuable in terms of analyzing the market trends, business insights, managing supply chains, and can be used to train artificial intelligence algorithms, thinking about autonomous driving and delivery. On the other hand, how companies and government uses the data has really raised its concerns about data security and privacy protection. In combating COVID-19, I don't know if some of you has heard that some of the local Chinese government has implemented this health QR code. So the health QR code helps with contact tracing. But if your QR code is anything but green, your access to public transportation, your access to certain businesses is going to be limited. In the legal industry, the whole data thing has been really hot and popular globally. And China has been issuing legislations and administrative measures to address the data security as well. Okay, Pat, I'm ready for the next slide. Now that we looked at what has been growing in China, I just wanted to take a minute to talk about what will be growing in China. I think nothing suggests, I think really the best document to look at is China's 5-year plan. It says China's policy goals and priorities. So where will the government support be? So the 14th 5-year plan is coming up. It will be released earlier next year, I believe, but there has been a lot of talk about a lot of similarity with the 12th and the 13th 5-year plan. A lot of the buzzwords are the same.
I think she'll be back in a sec.
Modernize our supply chain.
We know when the palm tree stops moving in Diana's house, then we know that the internet slowed down a little bit. So if Diana, if you can hear us, can you go back another minute and talk about the 5-year plan, because the internet cut out for a second.
So where was I got cut off?
Similarities between the 13th and the 12th and 14th 5-year plans.
Okay, so there really isn't that much change in terms of policy guidance. Can you hear me okay? Okay. The buzzwords is the same. Innovation, technology, IT, 5G, artificial intelligence, new energy, new materials, sustainable growth, and modernization of the supply chain. What is worth noting is that there is a sense of urgency for technology independence and self-sufficiency. It really is not a surprise to everyone that with the trade war and then with the expansion of US export control policy and synchronization of certain high-tech critical industries, this, I believe, will prompt China and Chinese companies to focus more on research and development, especially in critical parts like semiconductors and integrated circuits. So that is my presentation for today, and if you have more questions, I'm happy to discuss it during the panel or afterwards. Thank you, guys.
Great, thanks, Diana. So again, remember to send your questions for the panelists to me one-to-one in the chat, and I will ask them right after Michael's presentation. Thanks again, Diana. All right. There's a disclaimer. Thanks, Diana. All right. I once went to an Ohio Development Services Agency event in Toledo where a participant said, when you're doing business, there are 3 people you have to have on your team: your lawyer, your banker, and your accountant. So we've had lawyers this morning, and now it's time for our accountant. So our next speaker is Michael Bowman. Michael is a senior manager in the Columbus office of Schneider Downs and works in the firm's tax practice. Michael provides consultation to his clients to assist them in understanding the complexities of tax law and its impact on financial reporting and compliance so that his clients can make informed decisions for their business. He routinely advises clients on matters including accounting methods and periods, tax credits, and IRS examinations. Michael?
Thank you, Pat. I want to start by thanking the Chinese Chamber, the City of Dublin, and acknowledging Benita, David, and Diane. They did a great job today. So thanks for the speakers and the host for inviting me and facilitating today's event. The speakers also helped me out a lot in developing my agenda. So during our preparatory call, I asked the question, what are the top tax questions you all are getting as attorneys? And they helped me populate kind of a hit list for today's presentation. So thank you for that as well. My presentation won't focus on a specific country, but rather the broad tax considerations of cross-border business. The first half of that presentation will talk about 3 things that everybody needs to know when doing cross-border business, and one thing that everybody needs to know about cross-border business today, because it's a fairly new development, which actually ties into one of the earlier presentations as well. And in the second half, it'll be more of a general US tax update because it's December 10th and everybody needs to know 4 or 5 things as they head into the new year as business owners or employees of businesses, whether they're doing cross-border business or not. So generally applicable across industries and company types. Next slide, please. And so that's what we'll talk about. As far as the basics, we'll hit VAT, the India Ddt, sales and use tax, and transfer pricing. And the hope, again, is not to get too much into details, but really give you some practical takeaways, which we can then follow up on offline. And then again, the US tax update. Next slide, please. That is effectively what Pat read, so we can probably skip that as well and dive right into the VAT. So whenever any one of my clients goes offshore, whether it's Asia or not, inevitably one of the questions we'll be getting is about VAT. So what is the VAT? The VAT is a value-added tax, which is a consumption tax, somewhat synonymous to US sales and use tax. One of the interesting features is that it's levied at every stage in the supply chain from production all the way to the point of sale. So we've got a little illustration here, and the key idea basically is that at every step that same 5% VAT is being applied. So the manufacturer would sell the good to the distributor for $100, but it has to add the 5% surcharge, which makes the total invoice $105. The distributor sells the product for $200 because they have great margin. That makes 5% VAT $10, so the total invoice to the retailer would be $210. Note that at that step in the supply chain, there's a $10 VAT payable, but there is a credit for the 5% paid on the first invoice, so the net tax payable to the government at that step is 5%, and so on across the chain. Next slide, please. So some other key features, it is widely applicable. It's in place in over 160 countries with very few exceptions, one of them being the United States. It applies to all goods and services, whether physical or digital, so it's industry agnostic from that perspective. And again, the key point in the prior slide, it is collected by all settlers at each stage of the supply chain. So regardless of what you're doing overseas in particular, you're likely to come across that as you're buying or selling goods. The key point, I think, for businesses with respect to that is documentation. In that earlier slide, we showed how obviously you assess the VAT tax and collect it. When you then file your tax returns, it's important to know how much VAT you paid as a consumer so you can claim that credit and net your tax payable to the government in the local jurisdiction to a smaller amount. So very, very important. And then just a couple of additional facts to tie back to the earlier presentations. There is VAT in India, Japan, and China, and the rates, if I'm not mistaken, are 18% in India, 5% in Japan, and 13% in China. So relevant to the three countries that we spoke about today. Next slide, please. So VAT is kind of a general concept, and from my vantage point, it's kind of an outbound concept, right? So as a US business wanting to go offshore, it's something to know about. Another very similar topic, kind of in that vein, from an outbound perspective, is the India Ddt. And this is very consistent to Vanita's comments about an overall kind of effort in India to make the business environment more friendly. And this is just kind of one example of that. Happens to be tax sensitive, but in line with what Vanita said. So what's important to know here is the old law. So the old law was the dividend distribution tax, which was a tax of about 21%, which was levied not on the recipient of the dividend, but rather on the company itself. The idea there was to avoid a double taxation. Unfortunately, from the perspective of a US company, the fact that it was levied against the payor rather than the recipient actually made it a double tax situation because US taxpayers could not claim a foreign tax credit on those distributions. And if you look at the rate, it's 21%, which is made up of three different pieces, which is actually higher than the 15% non-resident withholding rate in place in the US-India treaty. So it actually was intended to be tax efficient, but made it a little bit costly to do business in India. So the Indian Parliament, government there obviously acknowledged this and effective April 1st abolished the DDT, replacing it with more of a traditional 20% dividend withholding tax on non-residents. And the key takeaway here is if you're considering doing business in India, it's very important to know from what country you're going to be making that investment to make sure you can avail yourself of a favorable tax treaty rate and end up paying as little as you can on those repatriations out of the country. Next slide, please. So we talked a little bit about VAT tax, and I made the comment that the US does not have the VAT. We do, however, have sales and use tax, which is very synonymous to the VAT. So from an inbound perspective, from someone perhaps coming here from India, China, Japan, elsewhere, it's something that you should be aware of. Sales tax is another consumption tax that's collected by the retailer in the final sale in the supply chain. And that's what makes it different from the VAT tax. So the end consumer bears the tax, but the retailer is the one who collects it and remits it to the government. The United States is also very interesting because in addition to the federal government, you have to worry about the 45 states and all those counties, parishes, and cities. And so sales and use tax is really levied by those hundreds of jurisdictions. Historically, sales and use tax was, nexus was created by a physical presence, i.e. the foreign company or just the US business had to have payroll or property in a state to actually be subject to a sales and use tax reporting responsibility. Recently, in the last couple of years, however, a court case went all the way to the US Supreme Court. It was the Wayfair case related to South Dakota. And the court established that that was no longer needed, and now an economic nexus standard could apply. So today, you no longer, in most states, need to have a physical presence, again, property or payroll, to be subject to sales and use tax reporting and collection responsibility. You just have to have enough sales, and the general threshold is about 100,000 in sales. So something that's relevant to all businesses, and something that's probably should be top of mind for foreign businesses entering the US market. And the last bullet point there is very key. Tax rates, tax filing calendars, tax rules, what's taxable, all varies by jurisdiction. So it's very important to know where you're doing business and to contact, of course, your advisors to make sure that everything is above board. Next slide, please. I can no longer see the slide, but the slide spoke about transfer pricing. And in the interest of time, I'll kind of give you a summary of the idea there. Transfer price is the price charged between related parties for a transaction. And the spirit of the US tax law effectively suggests that those transactions need to be arm's length. So the goods need to be transferred at a fair market value that approximate what price would be charged between two unrelated parties. And the real key in transfer pricing professional will tell you is documentation. In other words, there's a lot of different ways of looking at transactions. There's a lot of benchmarking that can be done, peer analysis that can be done. But ultimately, what's probably most important is to make sure that you have documentation in place. So when U.S. tax authorities come to review a tax return, where an auditor, let's say in a financial statement context, comes to look at the prices being charged, they're able to substantiate what you're doing from a transfer pricing perspective. And I'm actually impressed. I remembered everything on this slide, so we can skip to the next one, Pat. A couple of key things here, and I won't spend too much time on them, only because they're not widely applicable. But with the Tax Cuts and Jobs Act, which was signed by President Trump in December of 2017, there is a new tax called the BEAT tax, the Base Erosion Anti-Abuse tax. So if you were a large taxpayer, 500 million or more in gross receipts for the past 3 years, it is something else that you should consider and talk to your attorneys and accounting service providers about. And then the last bullet point there is that in addition to looking at the U.S. government as folks who are subject to U.S. tax law, we also need to be looking at other guidance, including that of the OECD. Next slide, please. So that will kind of transition away from things that we really need to know to do cross-border business to more of a general U.S. tax update. And I'll be relatively brief here just in the interest of time, but what everybody needs to know is that on March 27th, President Trump signed the Coronavirus Aid, Relief, and Economic Security Act, known as the CARES Act. And the hallmark of that, of course, was the stimulus checks that a lot of us received as individuals, as well as the PPP loan program that a lot of businesses received. In addition to all of that, however, I wanted to make you aware of some really key income tax consequences and changes for businesses specifically. There were a lot of changes for individuals as well, which we can talk about offline. But these are the 4 or 5 things that I felt everybody in this webinar should know about from a business perspective. The first is changes to the NOL rules. So for those of you that have been, following along U.S. tax law, that Tax Cuts and Jobs Act changed the rules for net operating losses, and you can no longer carry back your losses like you could in the past, and also changed the amount of losses that can be offset with NOLs. Well, in light of the kind of economic depression related to COVID, Congress thought it was a good idea to relax those rules for a couple of years. So that creates a 2-3 year window where NOLs can now be taken back. And the value of that, of course, is the ability to take it back to an environment where there was a higher tax rate, which creates rate arbitrage and a permanent US tax benefit. So if you have losses because of COVID, it's definitely something to talk to your advisors about. Section 163J, those are the rules for interest expense deductibility. And I'll just mention the fact that those two were also kind of freed up and loosened a little bit by Congress in an interest to generate some more cash flow for businesses. So if you do have an interest expense, you're doing business in the US, you now have a greater ability to deduct those amounts. QIP stands for Qualified Improvement Property. This too, believe it or not, also relates to the Tax Cuts and Jobs Act. And the issue there was that there was a technical error in the statute, which has now been corrected. And for companies that have these improvements to interior parts of a building, there's now the ability to go back and perhaps ask for a refund or change your method of accounting for these assets to a more favorable position. Just in the interest of time, I just want to highlight one last thing, which is the Employee Retention Tax Credit, the ERTC. And this one's important because businesses that were impacted by COVID, which most of them are, either because their gross receipts went down significantly or because they were doing business in a jurisdiction that was impacted by a government shutdown order, in some certain instances have the ability to go back and claim a credit against payroll tax, which is equal roughly to $5,000 per employee affected. So there's a lot to the payroll tax credit, but I will say again, if you were impacted by COVID, either by a shutdown order or by a decrease in gross receipts, it is certainly something to investigate because a lot of our clients are doing so and generating a great amount of benefit, which is particularly important in this COVID environment. So lots of moral of the story, a lot of things to think about from a cross-border business transaction standpoint. I highlight 3 or 4 that are kind of key. And then just in the general US tax environment, irrespective of the elections, because of the CARES Act, a lot going on that businesses should be mindful of. So I went way over, Pat. I'll stop there. But if anyone's interested in continuing the conversation, more than happy to do so. Again, that was very, very high level. There's a lot of details to kind of go through, but a lot of good opportunities as well. So a good time from a US tax perspective. Thank you.
Great. Thank you very much, Michael. Clearly a lot of expertise at Schneider Downs available for folks here in Central Ohio and beyond, because Schneider Downs is not only in Columbus, correct? Yep, great. So we've already gotten some questions in from the audience and would like to spend a few minutes on that. Hopefully folks can stick around. Let's see. First question is a question for Vinita. With regard to India, could you please speak to mobile versus traditional internet access and whether there's a demonstrable difference? If yes, how are companies investing differently in e-commerce in India? Any innovative approaches?
So that's a very good question. The traditional model of internet in India was the dial-up, but a lot of that has changed in the last few years. And I would say it's changed not because of the internet growth in India, it's changed because of the telecom growth in India. If you all are aware of the fact that India is actually one of the first countries which came up with 3G technology, with 4G technology, and then now 5G, where US is still trying to catch up, like your Verizons of the world and AT&T still don't have 5G. Where multiple telecom providers do have 5G and so on. So it was actually the telecom industry which facilitated the way internet is used. Because if you've been to India, you will see that everybody has a smartphone. Even to the point that if you look at somebody who's driving your 3-wheeler, the rickshaw driver, the tuk-tuk, which you use to travel, they all have smartphones. And I am actually sometimes amazed because the traffic is so bad in India. People are stuck on the roads for like hours to get anywhere. And you see people just sitting there watching movies on their smartphone or through their data plan. Firstly, the data plan is so inexpensive and is so easily accessible. So anyway, to your point is that The technology has changed because of the telecom industry, and the technology is driven by the telecom industry. In terms of e-commerce, India is one of the leading e-commerce industry. One of the pioneers of e-commerce, even before Amazon came to India, is a local company called Flipkart. So Flipkart is the clone of Amazon in India. And again, you can imagine that because of the growing population, e-commerce makes a lot of sense in India. However, because there were a lot of the foreign companies like Amazon and others who were coming in, the Indian government came up with regulations which applies to foreign e-commerce industries, which means that if you're an Amazon and you're going to be setting up an Amazon India, you have to source up to 30 to 40% locally. That means you can't buy products from China and sell on Amazon India. You have to source 30 to 40% locally. And that was actually then created a lot of issues between the foreign e-commerce providers and the Indian government. But again, the focus is on growing the jobs in India, growing the economy in India. That's why they have these rules in terms of local sourcing for e-commerce, But again, it's a very nascent industry. It's growing tremendously. There are rules and regulations that apply to foreign e-commerce providers. So if there is a foreign company who's looking at e-commerce in India, you would want to pay attention to those rules of commerce. The simple example I gave you was on local sourcing. If you are an e-commerce provider there in terms of your product services, you have to locally source 30 to 40%.
Great, thank you, Vanita. In the interest of time, I'm going to ask one more question that's for everybody, and then questions that are left are for individuals, and I will send them to you individually by email after the program. So this last question before we get into networking and end the formal part of our session here today, the last question is, understanding that relationships are so important in all Asian countries, how do you suggest that American businesses initiate a relationship with businesses in India, Japan, and China?
I'll take that first, Patrick, because I speak a lot about the two R's, and when I'm advising my clients, that's the first thing I say. Now, I will give this answer pre-COVID, during COVID. Pre-COVID, my answer used to be that the most important thing for you to do if you're looking at investments in India is, if you already found a local partner, get on that flight and go down to India and spend time with your partner. I have had clients who have done that, and they come back and they're like, oh my God, they treated me like family. I was invited to their house. They cooked a meal for me, and it completely changes the tone of negotiation. It builds the trust. Obviously, it was much easier to give that advice pre-COVID that, hey, get on the flight and get there and, stay there. But now during COVID, we still have deals that are going on. What we are telling clients is that, hey, look beyond the, just the contracts and all. Try to spend as much as time you can virtually with your partner. And we have actually told them that the best way to do the relationship is try to find what your common factors are. Do you like watching a movie together? I mean, that's a little too extreme, but, do you like some music, or do you like seeing a virtual program? And maybe invite your partner to do that with you. And that's how you build relationships virtually. If their kid is playing a concert virtually, join that concert, So there are ways. I know it's not very natural, but there are ways to continue to do that until we get over this pandemic crisis and travel becomes much easier, But in India, I can tell you that the key has always been that you need to go down and spend time with your partners, get the feel of the lay of the land, and that's the way to move forward.
Great, thanks, Vanita. Dave, how about you next?
Sure, and much of that's the same, I think, with the Japanese, the importance of the relationship. But one of the other things that I would add that is important to U.S. businesses as they consider doing business with the Japanese is a perspective. It's a long-term relationship, you're looking at it in the long run. It's not, well, can we get a contract signed within the next couple of months, but really showing your interest by having an office in Tokyo, having it, and as Vanita said, once it's available, being able to travel to Japan, but taking that long view and understanding that you're not going for the quick win. You're going for a long-term relationship, a long-term business goal of working with those companies and with those customers in Japan.
Great, thanks, Dave. Diana?
I concur with everyone. At the end of the day, it is a people business. You can do your due diligence. Your lawyers can draft up a perfect contract. The issue with trust really comes down to, at the end of the day, it's a people business. One of the things that I wanted
Palm tree stopped waving again.
the Shanghai operations in China, those are the reasons.
Diana, if you can hear us, I'll send you a message maybe you can write down, Diana, yeah, it looks like you're back. The palm tree's waving again. So we missed that. Can you summarize the answer? All right, I'll ask her to
There are resources. Can you hear me now?
Yes.
There are resources here that one can utilize. I believe Jobs Ohio has an office in Shanghai. Those resources will be very helpful for U.S. companies to go abroad.
Great. Thanks, Diana. Michael, would you like to add?
I would say one thing, which is that, each country has its own unique ways of doing business and broader culture. But irrespective of wherever you are in the world, whether it's Asia, Europe, Latin America, wherever it is, that personal connection is key. And to Vanita's point, it's a little bit harder now with COVID, but it's still the challenge and still the objective. And I will say that one more thing, I actually grew up as the son of an expatriate, right? We moved every 4 years across Latin America. So completely different from Asia, of course. However, I would say that would still hold true. Every single country was different, but irrespective of each unique culture, that connection was key. And I'm sure that basic logic applies anywhere in the world. So keep that in mind.
Thanks a lot, Michael.
Patrick, I just want to add in it's a funny thing, now we do calls through Zoom and our negotiations and everything through Zoom and team meet and all. And what used to happen was when we all started out, we were like, very pumped up, like everybody used to dress up and, make their hair and be on the calls. And then over a period of time, I started realizing my clients are on the call and nobody will even put on the camera. And then, we have the other party, be it from India, China, Japan, and I used to be like messaging them, can you just put your camera on? It doesn't matter, you haven't shaved, they really don't care. It's basic respect. And again, that's just the pandemic fatigue, and there are times when I'm on the call and I'm like, forget it, I'm not putting on my camera. If the client wants to talk to me, they'll talk to me or not. But sometimes you just have to step back and say, hey, they're making the effort of getting up at, staying up at 10 o'clock in the night and having a call with you. The least you can do is just put on your camera, and if it's going to be a contentious call that you want your points to be put forward, please put on your camera and just smile and, joke, and it has made it really difficult, for some of our clients to be like, hey, can we just get over this and get on with it? Because, this has been going on for so long. You can't keep negotiating on Zoom. It just doesn't work that well, But anyway, that was a funny thing I wanted to suggest, that I have started taking a shower and putting my camera on now, so that everybody feels comfortable about it.
That's good advice. Maybe we should have a program on international Zoom etiquette. Well, thank you very much, and thank you everybody, all of our speakers, for your time this morning, and thank you to the City of Dublin for sponsoring this event. Many thanks to JASCO and AIABG, because this was very much a collaborative event, and we look forward to doing more things like this. So this is the end of our formal program. We've got a lot of useful information. Please feel free to follow up with the speakers individually afterward. We will also put a recording of this online and also share the PowerPoints. So thanks again to everybody. And next we'll go into virtual breakout rooms for those of you who can stick around. But if you have to go now, now's the time to go. Thank you again.